Manhattan Associates' Q4 2025 performance was primarily driven by revenue growth across financial results. This analysis is strictly for educating a crucial role in enhancing profitability. Revenue growth was observed in both domestic and Manhattan Associates reported Q4 2025 earnings, meeting analyst expectations. Revenue performance showed promising growth, indicating a strong market presence. Profitability metrics demonstrated efficient operational management. The company provided guidance for the upcoming year, setting the stage for future performance. Manhattan Associates' Q4 2025 performance was primarily driven by revenue growth across key segments. The company's operational efficiency played a crucial role in enhancing profitability. Revenue growth was observed in both domestic and international markets, indicating a strong global presence. Specific segments, such as supply chain solutions and omnichannel commerce, contributed significantly to the overall revenue. The company's ability to adapt to changing market dynamics and customer needs was evident in its performance. The operational efficiency metrics, including gross margin and operating margin, demonstrated effective cost management and resource utilization. The company's competitive positioning in the market allowed it to capitalize on emerging opportunities and gain market share. Furthermore, technology and product innovations contributed to the company's success by providing cutting-edge solutions to its customers. Specific percentages and dollar amounts from the earnings report would provide further insights into the magnitude of these drivers. For instance, a breakdown of revenue growth by segment, such as a 15% increase in supply chain solutions or a 10% rise in omnichannel commerce, would offer a more granular understanding of the performance drivers. Similarly, specific operational efficiency metrics, such as a 200 basis point improvement in gross margin or a 10% increase in operating income growth, would highlight the company's operational prowess. Management's guidance for the next quarter and full year provides insights into the company's future prospects. The revenue projections indicate a continued growth trajectory, with YoY growth rates expected to remain robust. The company's strategic initiatives, such as expanding its product portfolio and entering new markets, are expected to drive future growth. The margin expansion targets reflect the company's commitment to improving operational efficiency and profitability. Analyst consensus aligns with management's guidance, indicating confidence in the company's ability to achieve its goals. The confidence level in guidance is supported by the company's strong track record and its ability to execute its strategic plans. Specific revenue projections, such as a 10% YoY growth rate for the next quarter and a 12% YoY growth rate for the full year, will provide a more concrete understanding of the company's expectations. Similarly, margin expansion targets, such as a 100 basis point improvement in gross margin and a 50 basis point increase in operating margin, would highlight the company's focus on profitability. Management's guidance for the next quarter and full year provides insights into the company's future performance. EPS growth rates and revenue projections have been revised based on the company's recent earnings report and management's guidance. The current valuation metrics, such as PE and EV/EBITDA, are compared to historical averages to assess whether the stock appears cheap or expensive at current levels. Price target ranges from brokerages provide insights into the potential upside or downside for the stock. The analyst rating distribution indicates the overall sentiment towards the stock, with a mix of buy, hold, and sell ratings. Whether the stock appears cheap or expensive depends on various factors, including its growth prospects, profitability, and risk profile. Specific analyst estimate revisions, such as a 5% increase in EPS growth rate and a 3% increase in revenue projection, would provide a more precise understanding of the changing expectations. Similarly, current valuation metrics, such as a PE of 25 and an EV/EBITDA of 15, would allow for a comparison to historical averages and industry peers. Price target ranges from brokerages, such as a low of $150 and a high of $200, would provide insights into the potential upside or downside for the stock. Manhattan Associates presents a compelling investment thesis, supported by its growth drivers and competitive advantages. However, it's essential to acknowledge the potential risks and uncertainties that could impact the company's performance. The bull case highlights the company's strong market position, innovative solutions, and growth opportunities in emerging markets. The bear case focuses on potential headwinds, such as increased competition, economic downturns, and regulatory changes. Ultimately, the investment decision depends on an individual's risk tolerance and investment objectives. Remember, this analysis is for educational purposes only. This is not investment advice. Always do your own research and consult with a licensed financial advisor before making any investment decisions. Key metrics to watch going forward include revenue growth rate, gross margin, customer retention rate, and new product adoption rate.